Over to Sarika.
Yes, welcome all. Welcome on behalf of Direct Tax Committee. We have organized panel discussion on salary taxation, and we have with us Direct Tax Committee Chairman CA Chandrakant Chitale. We have CA Pravina Oswal with us. We have with us CA Sachin Maniar, CA Prajakta Chinchorkar, CA Maushmi Shah, CA Munalini Damle, and Poonam Pathak with us as a panelist. So I request CA Pravina Oswal to go ahead, and I request CA Chitale sir to address us opening remark.
Well, thank you. Sarika, ladies and gentlemen and professionals who have joined this particular webcast. As you are aware, next month will be very hectic for all of us. And the main reason is compilation of returns of income. As you are aware that in this particular month, all the salary returns are furnished. Besides a few non-corporate entities, maybe estimated income scheme. But if you consider the number, salary returns are significant. And maybe after studying formally section 15, 16, 17, while we appear for CA final examinations, thereafter we keep on filing the returns, and each time we don't tend to read the law. But as you know that law is a flowing subject and provisions keep on changing. There are certain benefits which are arrested, certain new benefits come into focus. So before we start this particular season for salary taxation or compilation of salary returns, we thought it necessary that let us have a detailed discussion on various provisions relating to computation of salary income, so that maybe we have certain knowledge but that will get brushed up, and if there are certain new provisions or certain provisions which were there for a couple of years and which have escaped our attention, then those also will come to our notice, and whatever computations we make will be appropriate and there would not be any backlash. Because friends, you are aware that not only we have to compile the return, but return is also uploaded from your computers. So if there is any error in computation, maybe salaried person may safely say नहीं नहीं वो क्या हमारे सीए ने कर दिया तो मुझे पता ही नहीं था. And then maybe for escapement of any tax on income, besides the taxpayer, the chartered accountant also may find himself in difficulties. Typically what happens that this particular job is entrusted to the article clerks and other assistants, and maybe at the last moment it comes to your table. So it is necessary that when you are dealing with salary, you have to ask certain pertinent questions. That okay, if supposing a son of a salaried person has taken admission to some medical engineering and he has given donation of 50 lakh rupees, 1 crore. As you are aware that directly salary slip will not show anything out of it. But then one has to consider that whether there were adequate means available with a person to pay that donation. So all these type of questions, issues will be deliberated here, and we will know what checklist we can prepare. So salary income, although it is only 3 sections and few other provisions and rules, the dominant part of taxpayers is salaried persons. Therefore, and also in case of business entities, maybe you are getting salary from the company in which you are a managing director. So it is, so to say, an all pervasive income head. Along with salary income, the panelists have informed me that maybe there are certain typical other incomes like house property, like maybe bank interest, and they also need to inform the tax compilers that how these provisions operate. So friends, the panelists have really studied well. Before addressing this particular meeting, they have had discussion amongst themselves, and I am sure their collective experience and wisdom will reflect, and you will get rich dividends of this particular session. So whatever queries you have in the meanwhile, maybe you can put them in chat box, so that Pravina, who is moderating this particular session, and also Sarika, they will compile the questions, and besides the questions which already she has received, she may include conveniently those questions as well. So I welcome moderator Pravina. We have other panelist, Prajakta from Prevalent from Y. So if anybody wants to go to Mahabaleshwar, they cannot go without meeting Pravina at Y. Then we have from Pimpri Chinchwad, Prajakta. We have from Navi Mumbai, Poonam. Uh, we have Mrunalini from Nagpur, and my very good friend Sachin is a specialist in Esops. So we have specifically requested him to join us so that whatever taxation aspect of Esop are there, they will be addressed. So with this expert panel, I think we will be able to really understand this section very well. So best wishes to all of you, and I hand over to Sarika once again. Thank you.
Thank you so much, Chitale sir. Now we have our panelists with us, and I'll introduce one by one so that we have very expert area of panelists with us. First is CA Maushmi Shaha. She is a chartered accountant with
I
plus
forgot to
years of
mention her.
experience.
She is heading the Vikas of Pune branch, and also Sarika is in Pimpri Chinchwad branch. She is working very hard for managing committee. Thank you. Okay, over to you.
Thank
Yeah.
you, sir. Thank you, sir.
Yeah.
Okay,
No, you
thank
were
you,
not
sir.
visible on the screen, so I did not realize.
I'm there, sir.
No, no, on my screen.
Oh,
Okay.
Okay, thank you, sir. CA Maushmi Shaha is a proprietor of Shaha and Associates, and she has previously worked with WNS Global Services as an assistant manager of finance. She was senior consultant in corporate tax department at BNY. Then she has been a visiting faculty at various management colleges. She is currently an independent director at BSE listed company. She was convener at Pune West Study Circle in 2011, and now she is a Vikasa chairperson at Pune branch of WRC of ICI. Apart from that, she is also an active member of Rotary Club. I welcome CM Oshmi Shaha. We have with us CM Runalini Damle. CM Runalini is a fellow chartered accountant practicing in the area of income tax, including representation before various appellate authorities. She has also worked as a director in one of the fastest growing SME and have handled matter of listing of SME IPO. For further enrichment in the profession, she has completed her LLB. She was also a member of Young Empowerment. I welcome CA Prajakta Madam, CA Prajakta Chinsolkar. She has been in practice for more than 12 years. She is holding a business English certificate from University of Cambridge, and she is a founder in PHC and Company LLP, Pimpri Chinchwad. She has headed as a chairperson of Vikasa Pimpri Chinchwad branch for consecutive 2 years, 16 and 2017. She has initiated various innovative projects for students during her tenure. Being a passionate public speaker, she has also been conducting various training sessions in corporate entities. I welcome CA Prajakta ma'am. CA Sachin Maniarji. He is in practice for more than 2 decades and have also done specialization in Esops. He specialized in designing and implementation of Esops for Indian companies as well as the Indian operations at MNCs. He has been involved in offering full spectrum of fully integrated stock plan management services. He has delivered seminars at program held by Confederation of Indian Industries, Raisoni Management Institute, Nagpur, international study tour he has organized by Pune branch of WRC. He is also director at Lakshmi Krupa Urban Cooperative Bank, secretary of Niranjan Seva Bhai Sanstha, and has also been a member of board of Mahesh Professional Forum and few other social organizations. I welcome CA Sachin Maniar. We have with us CA Poonam Pathak. She is a chartered accountant based in Navi Mumbai. She is a forensic auditor and fraud detection. She has done concurrent audit. She is in practice for 4+ years and doing tax audit and compliance services. She has done internship in cyber security with Cyber Cell of Gurgaon Police. And she is a partner at Ajay Savni and Company. She is also woman empowerment activist. I welcome all panelists. Now we have with us our moderator, CA Pravina Oswal. who is in practice since last 18 years in Y, Satara district in the area of direct tax and indirect tax, project work, subsidy proposals. She has delivered lectures in local colleges for career counseling, personality development, women empowerment, and entrepreneurship development. She has given national webinar on topic, the facts and awareness on career opportunities, skill set, mindset required in digital area, which is attended by 16,000 students and budding entrepreneurs. She has elected as managing committee member for 22-25 and currently working as secretary for Satara branch of WRC of ICI, having 250 plus members. So I welcome all panelists, all our friends. I welcome all on behalf of Direct Tax Committee. Over to you, Ravina.
Thank you very much for such a kind introduction. We have very versatile panelists all over various states. Yeah. Yeah, actually, just a minute. Other camera is. Provision of the make awareness about the provisions of the salaries among the general public. So by the initiative of the Chitre sir, we have organized these sessions and we have versatile panelists among us. So I start with Moshmi to give us a basic idea about what all is covered in the salary. Moshmi?
Yeah, good evening. As you all know, we have 5 heads of income, and the very first head being income under the head salary. Now, if at all any income has to come under the head salary, the basic essential part is there has to be an employer-employee relationship between the payer and pay. If at all this relationship does not exist, then we cannot have any income under the head salary. So once this basic condition is satisfied, then we can go ahead and see the nature of the receipts that we have. So assuming that there is a relationship of employer and employee between the payer and pay, then we can say the salary, we include wages as well. So wages would be included, pension, gratuity, fees, commissions. Sometimes employees also get perk visits, say in accommodations to stay, car facility, some educational facilities, telephone facilities, food facilities. So such facilities can also be received by the employees. All these are called as perk visits. So these perk visits are valued and they are also brought under taxation under the head salary. Apart from that, advance salary will also be taxable. Leave encashments. In some companies, you have a policy of encashing your leaves. So that also get taxed under the head salary. Any accretion to the balance of the RPF account or any transfer of balance in the RPF account will also come here under the head salary. So we have section 15, which is a charging section under the head salary. And this charging section lists down various components of salary or various things which can be brought under salary. So in short, salary would include your basic salary plus the various allowances that you may get, as well as the various perquisites that you may receive, plus your retirement benefits. So this would come under the head salary.
Yeah. Thank you very much, Moshmi. You have explained elaborately what all under come. Otherwise, people are under assumption that what we get in my bank account is only my salary and I have to pay tax only on that amount. So now I would like to ask to Prajakta, what deductions are allowed from the salary? What allowances are exempt? What allowances and perquisite are exempt, and what deductions are allowed from the salary? CA Prajakta.
Yes. Thank you very much, Praveena ji. And before I start, I must make a mention of all the dignitaries, the panelists who are present here. CA Praveena ji, CA Sarika ji, and the chairman of Direct Tax Committee, CA Chandrasekhar Chitre sir, under whose able guidance we are arranging this particular session. So I'm really glad to be a part of panelists here. And Praveena ji, let me take a moment before I come to the question and tell you that I'm afraid of three things in my life. One is to run on a railway track where railway is chasing me from behind. I'm afraid. Two, if someone asks me to bang my head on a rock solid wall, I'm afraid. And three, very important, is to conduct a lecture in an online session where I cannot see and make an eye contact with any of the audience. I'm afraid. But I'm assured also that though we cannot make an eye contact with the audience, you all will be very responsive and participative audience. And the fear which we have, all the panelists maybe, to present in an online session, you will vanish off that fear. So with this, I may come to the question which you have asked, Praveena ji, about the allowances, perquisites. So I would like to elaboratively tell what are the differences between the allowances and perquisites, basically. Moshmi ji has rightly given us a brief outline about the salary, the sections which are there in the salary structure. If we talk about the allowances, there are a number of allowances which form part of salary. It can be exempt allowance or a taxable allowance. So if we talk about house rent allowance, maybe uniform allowance, dearness allowance, or maybe a conveyance allowance, traveling allowance, number of allowances are there. If we talk about perquisites, yes, section 17 also tells us how that perquisites are computed. And there are n number of perquisites which are which forms part of salary. So it can be a free of cost perquisites, or it can be a benefit which is offered to an employee, maybe at lower cost. So let us take an example of a rent-free accommodation, or maybe a loan given at a lower interest rate, that also forms of perquisite. So in totality, what I will say is allowance is something which is given as a fixed amount to an employee to cope up for the particular expenditure which he has to expend during the course of his employment. But perquisite is some additional benefit which is forming a part of salary because of the terms of agreement, employment agreement. So this is the basic difference between allowance and perquisite. Apart from that, allowance is often given in cash. When I say cash, it also includes the other means, I mean bank and the online transfer, obviously. But perquisites are most of the times are either in cash or in kind. Like rent-free accommodation is a perquisite in kind, but allowances are often in cash. Let us come to now the taxability of these allowances and perquisites. So the basic difference between taxability of allowance and perquisite is whenever you are getting some allowance, only the non-exempt part of that allowance forms part of your total salary. So when you are getting HRA for that matter, only the non-exempt part of HRA forms part of your salary. But for perquisites, it can be either taxable or non-taxable. And the method for computation is already mentioned. So coming to the exemptions and deductions now, what Praveena ji asked is, if we come to exemptions, I mean, often interchangeably, these two words are used by layman, but there is a difference between exemption and deduction. So when we talk about exemption, we have handful sections in section 10. So allowances जो exempt होते हैं, that are mostly from section 10, which we get the exemptions. Excluding a few allowances like entertainment allowance, जो section 16 में exempt होता है. Apart from that, most of the times we get exemption of allowances in section 10. Deduction is something which is deducted. I mean, for that, income is already forming a part of your total income, and later on you get the deduction. So most of the time, these deductions are, you get the deductions through section 80 route, chapter 6A route. Apart from section 16 deductions, like standard deduction एक है जो हमें directly मिलता है salary से. Apart from that, first the income has to be formed part of your taxable income, and later on you get the deduction. So I think I have explained you briefly the difference between allowances, perquisites, exemptions, and deductions. Thank you.
Yes, Prajakta ma'am. You have explained very nicely what are the difference between all these. Many times the employees get cash in his salary in his account, but he's not, he's confused whether it is professional income, if it is professional or salary. So I want to ask to CA Mrunalini that if Mr. A was in charge of overall operation of the company, and if he received consultancy fees as well as sitting fees from the company as his professional income, and he has claimed various expenses from that income. So is it right in doing so? Should he claim that income as salary or professional income? CM Mrunalini?
Thank you, Pranam, for this opportunity. Coming to your question, wherein you have asked that Mr. Reed was managing all the affairs. So he was like working as a managing director. So it is very likely that the people may confuse it with the thing that as he was in charge of all the operations, he should be an employee of the company. But we need to see the agreement in between the parties, that is what the company has entered into. We need to check first that whether as per the service agreement, he is allowed to provide his professional services, whether the company is making deduction under section 194J, whether that person is maintaining his books of accounts as required under 44AB. And there is nothing in the law which prohibits that if you are managing the business, if you are in charge of that, you have to be an employee. So prima facie condition for taxing that particular income, whatever he is receiving under the head salary, is that there should be a relationship of employer and employee. So I would say that in this particular question, we need to see whether that kind of agreement is existing in between them. If it is existing, then yes, he is entitled and he can draw a salary. He can draw that particular income as his professional income and definitely can charge expenses against it.
Hello. So we have to see the true nature of the transaction, and then we should decide that whether it is salary or a professional income. Yes, because yes, from professional salary, we are not allowed to get any deduction for the expenses, which are allowed under business income for the professional income. Yeah.
Yes.
Thank you. Nowadays, many persons are going abroad or provided services to the foreign companies and getting salary in foreign exchange. So my question is to CA Sachin. If employee is if a person is an employee of a closely held company and XYZ Limited, and XYZ Limited is a subsidy of a overseas company, and if he receives Esops of the parent company, which is based out of India, how would this transaction be taxed in India? CS Sachin, can you please explain the taxability of the Esops?
Yeah, thank you, Pravina. And first of all, I would like to thank the Direct Tax Committee for inviting us for this panel discussion. Now, to specifically speak about your question, before we go to that, it's very important that first the participants who are attending, they understand what are the stages in an ESOP. Basically, there are 4 stages in an ESOP. The first is the grant, where options are actually granted to an employee. Second stage is vesting, where the lock-in period gets over. Third stage is exercise of option, where actually the employee pays the exercise price to the company and shares are issued in his name. And fourth stage is sale of the underlying equity share. Now, to typically answer a question raised by Pravina, first we need to look at transfer pricing regulation. Now, even though the employee is working for the Indian subsidiary and he has received options of the US parent company, let's say, for example, or any parent company situated overseas. Now, transfer pricing guideline says that in such kind of a situation, the parent company need to pass on proportionate accounting impact on the options that are granted to the Indian company to the Indian subsidiary. So they will be passing on the accounting impact to the Indian subsidiary. Now, even though at the start, as Moushmi mentioned, that there has to be a relationship of employer-employee between both the entities. Now, over here, options are granted by the US parent company and not the Indian subsidiary company. But still in this case, this transaction will be taxed in the hands of the employee. So what we need to do is the employee will be taxed not at the time of grant. Employee will be taxed not at the time of vesting, but employee will be first taxed at the time of exercise of option. And the difference between the prevailing fair market value as on the date of exercise and the exercise price, this difference is taxed as perquisite. Now a question may come over here. How do we determine, let's say, the fair market value of the overseas parent company? In case if the overseas parent company is closely held, we need to take the Indian subsidiary, will have to take a valuation certificate from the external expert, which is applicable or which is as per the prevailing law in the overseas country. So based on that valuation certificate, the perquisite value will have to be calculated and the Indian subsidiary will have to do TDS on the perquisite portion, and this perquisite will become a part and parcel of your Form 16. Now, one more important point to be noted over here is, as per Rule 11 UA in India, in case of a closely held company, you need to take valuation certificate either from a merchant banker or from an accountant. But this rule won't be applicable over here because the options are of the overseas parent company. So clearly we can rely on the certificate that will be provided by the parent company and calculate the perquisite portion. Lastly, we also need to keep in mind that we need to refer to the double taxation avoidance agreement between India and the country in which the parent company is incorporated. And as per the DTA, if the transactions are taxable in both the countries or whichever way it is taxable, we can claim credit for taxes that are paid overseas by the Indian employee. Now, since the person is based in India, his global income would be taxable over here. And for whatever matter, if this value as on the date of exercise, if this is taxable in overseas as well, then he can claim credit for those taxes over here in India while filing his return. Over to you, Pravina.
Yeah, CS Sachin, you have explained elaborately the provision related to Esops received from the overseas company. Now, I would like to ask to CA Mronalini that there are various other amounts which are received by the employees, like if a hotel waiter or services provided in the hotel has received certain tips from the customer, and these tips are collected by the hotel owner, and then this amount is given to the employee. Then is employee is liable to pay tax on such amounts?
Thank you, Pravina. Yes, the employee, as stated, receives many amounts, but the basic criteria, as the Moushmi has stated in the initial start of this session, that the basic criteria is whether that amount is received in the capacity of employer in the nature of
Actually, I think there is a problem with the network connection of the Mrunalini.
There is some network problem.
So I think we will wait till she connect, and we'll move to the further question. Meanwhile, I will request to the audience of this session to send the message the questions in the chat box, so that if our panelists can answer their queries. Thank you very much. Now, I would like to ask CA Prajakta that if an Indian resident earning salary from the other country, what is the taxability impact in India? What if the foreign entity has already withheld or deducted the tax in that country? So if he has to pay tax in India also?
Okay.
CA Prajakta?
Yes. Pravina ji, this kind of situation is happening very often these days because employees are sent for some assignments or maybe for the project life in the other countries these days. And the funny part is these days client comes to us with the Google knowledge. So often we have clients who already have the information with them. They are so equipped with the data which is available on Google, and then they enter to our offices, and they are not interested in getting opinion from us, but they just want the weighting from us, whatever data they have collected. So, I have got such kind of client who was working abroad for some months in a particular previous year. And he came with all Google knowledge with him. And he himself was telling me. So these kind of clients are really dangerous. I belong to Pune, and Pune's boards are really famous. So I have heard about one board which was booked besides the cabin of a chartered accountant. And it was saying that keep your footwears and Google knowledge outside the cabin. So on this platform, I may make an appeal कि हमें भी ये करना चाहिए actually. So coming to your question, Praveena ji, yes, an Indian resident who is going abroad and he is getting salary from the employer outside India. So we may take a situation that एक company है जो यहाँ पे वो resident को salary मिल रही है, India में मिल रही है, and when he is going abroad, जो उसका वहाँ का counterpart है employer का, that particular employer is giving him a salary also. So what are the situations? Before I address this particular query, let me give a brief outline to all the participants about section 9.1 in specific, which tells us about the income deemed to accrue or arise in India. I think CA Sachinji also made a mention of the residential status and all. Going ahead, I'll briefly tell you the cases wherein employer दोनों employee resident है, non-resident है, employer government है, private है, तो क्या situations होंगे, and then I'll come back to this specific case. So let us take an example that there is an Indian citizen. He may or may not be the resident of India, R या NR, दोनों भी हो सकता है. And the employer is government of India. So let us take an example of employees of Indian embassy who are working abroad. If they are rendering their services outside India, then what is the taxability impacts? So they are rendering services outside India, but still their salary is taxable in India. What about the allowances and perquisites? My question to the participants, you may drop an answer maybe. So what about the allowances and perquisites for an Indian citizen whose employer is government of India? Services are rendered outside India. So there is a specific section 10.7, which gives them the exemptions, and the allowances and perquisites which are earned are exempt in that case. Let us come to one more case wherein an employee is non-resident. Employer may be government or a non-government entity. Services are rendered outside India. So non-resident hai, services are rendered outside India. So what about the taxability of a salary? The salary will not be taxable, non-resident. What about the allowances and perquisites? Obviously, that is also not taxable. Now we come to the specific question which has been asked. The employee is resident. Employer can be government employer or a non-government employer for that matter. Services are rendered maybe inside India or outside India. Salary is taxable. So as Sachinji has also mentioned, for a resident ROR person, his global income is taxed. May it be salary, allowances or perquisites. Everything is taxed in India. Now the sub question which Praveena ji asked was, what if the company which is outside India has withheld the tax? Now in India, we call it as TDS, tax deducted at source. But when we go outside India, it has been often termed as withheld tax. So yes, so when we come to this withheld tax, we have to first check what is the salary structure, how it is formed. So whenever a particular person, particular employee is sent abroad, mostly he gets the fixed salary paid by Indian entity in Indian currency, and he gets allowance, which forms part of salary, which is being paid by an entity outside India. This is usually the salary structure. So you also need to check what kind of salary structure he is having. So we say that for a resident, his global income is taxed, but that foreign entity has also withheld the tax. That means tax is deducted. So वो बेचारा क्या करेगा? वहां पे भी उसका टैक्स काटा हुआ है, यहाँ पे आप बोल रहे हैं यहाँ पे भी टैक्स आपका टैक्सेबल होगा, तो बेचारा क्या करेगा? So yes, government has come up with foreign tax credit scheme for him, जिसमें he can get a foreign tax credit for the withheld tax. So there is one rule which I will mention here, Rule 128, which has been notified by department, जिसमें ये पूरा तरीका दिया हुआ है how that tax credit will be given to him. So basically कब ये मिलता है, मैं 2-3 पॉइंट्स ही सिर्फ यहाँ पे मेंशन कर पाऊंगी, पूरा तो नहीं कर पाऊंगी, बट FTC जो बोलते हैं जिसको foreign tax credit, it will be allowed in the year in which that income is offered to tax. So salary जिस ईयर में टैक्स की गई है उसी ईयर में आपको क्रेडिट भी मिलेगा. There is one more point is this foreign tax credit जो withheld किया हुआ टैक्स है, that will be allowed only against tax, surcharge and cess, but not against interest and penalty. Again, that withheld tax in the foreign entity should not be the disputed one. Otherwise, you will not get the credit. So these are just the brief overview and how to get that tax credit. I mean, what is the route to get that tax credit? So there is Form 67, which has to be filed. So this Form 67 should be filed before filing income tax return. Otherwise, your return becomes defective. So first Form 67 has to be filed. It has to be filed online. And there are a number of documents also which has been mentioned. So portal pe bhi uska link hai. So that has to be filed before the filing of income tax return. Yes, thank you.
Thank you very much. You have explained elaborately. So the assessee or taxpayer should do tax planning before tax deduction or getting the salary. Otherwise हमारे पास क्या होता है कि सब TDS कट हो जाता है, साल का मतलब ईयर खत्म होने के बाद वो हमारे पास फॉर्म 16 लेके आता है, पूछता है हमें अब क्या करना चाहिए. तब बहुत बार टैक्स कम डिडक्ट हुआ होता है तो टैक्स विथ इंटरेस्ट पे करना पड़ता है, तो या फिर बहुत सारे डिटेल्स दिए नहीं हुए रहते, तो इसलिए टैक्स प्लानिंग है वो एडवांस में होना चाहिए. साल स्टार्ट होते ही हमें हमारे सीए के पास जाना चाहिए और उसका एडवाइस लेना चाहिए कि व्हाट इज द प्रोजेक्शन फॉर द ईयर, हाउ मच मनी आई एम गेटिंग एंड हाउ मच टैक्स आई शुड पे ऑन दैट, राइट? So there are many, as I said, there are many perquisites taxpayer employees getting from the employer. So I would like to ask to CA Poonam that if I'm getting HRA from the house rent allowance from the company, and also I am having self-occupied house property. So I am can I claim deduction for that allowance?
Thank you so much, Praveena. And before going to the question, I want to thank Direct Tax Committee, and good afternoon to all the panelists. And it's really wonderful to listening all of you. And you are really elaborating every question in very wonderful way. So now I should go to my question, that one person is having self-occupied property and also she want to claim HRA. So before going for the answer, whether she can get exemption or not, we should understand what is the HRA. So HRA is the allowance paid by the employer to employee to meet the cost of rented house. That Income Tax Act allows exemption in respect of HRA only if the employee is staying in a rented house. If that employee is residing in his own house and not paying rent, then this allowance will not be exempt and it will be fully taxable. So in our case, if the assessee is having self-occupied property also and want to claim HRA deduction, here is one exemption, here is one condition that owned property is not in the same city where the assessee is working. And if it's beyond the limit of 50 kilometers and municipal limit is changing, in that case also, they can claim the exemption of HRA. So over to you, Praveena.
Thank you very much for throwing some light on HRA house rent allowance received by the employees. Now I would like to Sachin again that some of the employees receive RSU also. So can you please elaborate on RSU? Is it different from the Esops and how it is taxed in India? CA Sachin?
Yes, thanks, Praveena. So before going into what is RSU, first we need to understand what are the different types of ESOP. RSU is one of the shade of ESOP. Now, typically in India, we commonly find stock options, that is ESOP, Employee Stock Option Plan. Whereas there are a few other shades of ESOP as well. One of that is ESPP, that is Employee Share Purchase Plan. Then one is SAR, Stock Appreciation Right. And the last one is RSU, which is called as Restrictive Stock Units. Now you will find that RSUs are commonly used by US entities. So all these employees will be working either for the subsidiary of a US entity or maybe an entity based out of Singapore. So when in Singapore and in US, instead of granting ESOPs, they grant RSUs. Now, even though it is a share of ESOP, first try to understand what is the basic difference. In ESOPs or when stock options are granted, there is a certain exercise price associated with the options. Whereas under RSUs, there is no exercise price. In a sense, these RSUs are granted at nil exercise price. So irrespective of the name, if you just forget the name, the nomenclature RSU and treat the same as ESOP, the only difference is exercise price is nil over here. So as and when again these RSUs will vest and as and when employee exercises the RSUs, it will be taxed just like an ESOP only. So don't get jumbled with the terminologies. Just try to understand that the terms and conditions are a bit different in RSUs as compared to ESOP. Else it is entirely taxed as ESOPs only in India. So at the time of exercise, whatever is the fair market value of the shares which the employee is getting, that entire fair market will be taxed as perquisite. The reason being the exercise price is nil. So again, a question comes over here, what if the entity is closely held? And what if the entity is listed overseas? So if company is listed, then the fair market value is readily available and we can take it from the stock exchange wherever it is listed. Whereas in case of a closely held company, This value will be determined based on the valuation certificate provided by the parent company. Now, one more thing I would like to mention over here is never you will find that an Indian company has issued RSU. Reason being, technically Indian companies cannot issue any stock option at a price which is lower than the face value, because if you issue share at a price lower than the face value, it is treated as issue of share at discount, and in that case company need to take special approval from central government. So for all practical purposes, getting this approval is not possible. So whenever you see an RSU, first make sure that these are issued by a company which is overseas company and not an Indian company. In case this is an Indian company, because in the previous question which Pravina raised, I forgot to make a mention of one very typical case which I have noted about taxation of Esop. Now it so happened that the employee was the CEO of the Indian subsidiary company, and he got stock options of a foreign entity which was the parent company, and it was closely held. Now, as and when these options or RSUs vested, no perquisite taxation was done by the Indian subsidiary, and now the company has got acquired. The US entity has got acquired. So now when the CEO is transferring his shares to the acquirer over there in US, he is receiving amount in few crores in Indian currency. And now he wants to pay the tax, but there is a problem where no perquisite tax was done. He is ready to pay the tax on the entire amount, but technically now they cannot pay tax on entire amount, and he will have to pay only the capital gain tax for profit which he has made beyond the exercise date. But any which way, coming back to our question, RSUs are just like Esops, and they are also taxed as on the date of exercise only. So just make it clear or be cautious that in case if any of your clients, if they have issued RSUs to their employees in India of their foreign company, then make sure that the perquisite tax is calculated as on the date of exercise and TDS is done on that. Over to you, Pravina.
Yeah. Thank you very much, Sachin. Mrunalini had joined. There is some technical issue, so I would like to continue with her. As I said, can you explain that if the hotel tips are received by the customers and it is collected by the employer, and then they are given to the employees, then should employee pay tax on that amount also?
Yes, thank you, Pravina, and first of all, sorry for the network issue and inconvenience caused. Yeah, coming to my question, Mosami in the initial beginning of the session itself had stated clearly that if there exists a relationship of employer-employee, then only have to take that particular income under the head salary. Now, in this particular case, if we see the tips are just a voluntary payment which we make out of gratitude, and it is not compulsory that it will be paid by all. Further, that amount is being collected by that employer, whosoever the hotel owner is, in a voluntary capacity. He is not paying them under the contract of employment. When it is not being paid under the contract of employment, the same cannot be termed as a part of salary. And hence, I think that if the amount is being paid to them, that they individually can take under the head other sources or so. That won't be taxed under the head salary in the hands. Over to you, Pravina.
Thank you very much, Pranalini. You have explained it very well. Now, again, there is a query on house rent allowance. So I would like to ask to CA Poonam that if the employee gets house rent allowance also, and if she has taken the house property on loan and is paying interest to the borrower, so what is the provision in the law?
Thank you, Pravina. Yeah, so you are asking, can you repeat the question?
Yeah, Mrs. Asha has paid interest on loan for commercial property, and she claimed this as a deduction in the from house property. And she is also claiming HRA, which is she received from her company. So is she right in doing so?
Okay, so in this case, assessee is having commercial property. He has taken on loan and paying interest for it. And assessee wants to claim HRA deduction as well. So in this given case, we need to understand what house property includes. So includes commercial property and residential property, all kind of property. So commercial property is part of house property, and as per section 24B of Income Tax Act, or assessee can claim exemption from the loan of this commercial property. Also, she can claim HRA deduction as well. There is something else, Pravina, in the question. You are on mute.
What is the difference if the house property is same city where the employee lives?
So the condition will be the same. If it is in the same city or in another city, there will be no difference.
Okay. Thank you very much. House rent allowance, I think every employee gets. And he may be having some other properties also on which he is paying interest, or he is getting income from other property. So he should study all these provisions and pay his tax accordingly. Thank you very much. Now I would like to ask CA Moshmi that nowadays national pension scheme investment is national pension scheme is obvious. Many employees and employers are contributing to national pension schemes, and also employees are having various national pension schemes with banks also, like Atal Bihari Pension Yojana, etc. So what are provisions related to national pension schemes for the from the sake of the employees?
Every time a salaried employee comes to my office, the first question that he asks me is that what are the various deductions or exemptions I can have, because they already know that salaried people have very limited deductions or exemptions. So one new option that we are offering to our salaried people is, we say, in case you want a deduction, you can invest the money in this NPS account. So what will be the benefit? This is the next question that they have. Normally, as you know, under Chapter 6A, we have a deduction of around 1,50,000 rupees under Section 80C. When we say 80C, this limit of 1,50,000, it includes 80C plus 80CCD1, which is also for NPS. So 80CCD1 contribution to NPS will come under that 1,50,000 only. But if at all the employee wants additional deduction, then he can contribute towards Section 80CCD1B. So that is also a national pension scheme. And here I would like to, I do advise my assessee that there are two types of accounts under NPS. The first account is Tier 1 account, and the second account is Tier 2 account. Contributions made to Tier 1 account are eligible for an additional 50,000 rupees reduction under Section 80CCD1B. Now, why is it so? The reason being, if any investment is made to Tier 1 account, then there is a fixed lock-in period up to the age of 60 years of the assessee, and withdrawals often are not allowed. At the same point of time, contributions are required to be made every year, at least to a minimal amount of rupees 500. So they have various conditions in the Tier 1 account, because of which it has made it eligible for that additional 50,000 benefit if the amount is invested. But if the same amount is invested in the Tier 2 account, then in spite of investing in an NPS scheme, the assessee will not get the benefit of that additional 50,000. So whenever the assessee is thinking of investing in NPS account, he first has to check if he is doing it purely for this deduction. Then he can go ahead with investments in NPS under Tier 1 account, so that he gets that benefit of additional 50,000 over and above that of 1,50,000. So the total deduction there he'll get in that case will be 2 lakh rupees, 1.5, which comes under 80C, plus 50,000, which is for 80CCD1B. Another thing I would like to add over here is, it is not only the salaried people, or it is not only the employees who can claim this 80cc 1B, but self-employed people can also take the benefit of this section. So say I'm a practicing chartered accountant, or I have some business and I would want some additional deductions to be taken, then I can go ahead with this 80cc D1B deduction, invest that 50,000 rupees into the NPS account under Tier 1 account, and get that additional 50,000 rupees benefit. Another thing I would like to add over here is you also have a section 80cc D2. Now over here, if the employer has made contribution under this NPS scheme for the benefit of his employee, then the employer can claim this deduction, which comes under section 80cc D2. And there also they have given a limit of 20% of his total income. So if at all he has contributed any amount for the benefit of the employee, then yes, that employer can take the under section 80cc D2 of that 50,000 rupees. I hope I'm clear.
Yeah, right. So this is additional benefit which are of which many are not aware about. So now they can get additional benefit of 50,000 deduction from their tax, and they can save taxes accordingly. Now I would like to ask CA Mronalini that many employees received leave travel allowance. So if Mr. Sajid has received leave travel allowance, and whether he is under statutory obligation to show the evidence about the amount paid toward the leave travel concession or conveyance allowance. Should he provide evidence to his employers?
Yeah. Normally, at the end of the year, every employee has to fill out that particular form wherein he has to give all the details, and on the basis of which the employer is required to make the deduction under section 192. Normally, all the figures are just filled out. And in case of leave travel concession, I would like to quote one judgment of the Supreme Court in the Larsen and Turbo case specifically, wherein the Supreme Court has specifically stated that the beneficiary of this particular is the assessee, means the individual. So when in particular case, and further there is no CBDT circular for directing under section 192 that you have to collect all the evidences. Though it is a directory that employer should have it, but there is no statutory obligation for him to collect all the evidences. Whenever the case is selected, if required by the assessing officer, that employee is required to provide all the documentary evidences, but he is under no statutory obligation to provide all the documents to his employer. He can just fill it out as form and provide it to the employer. So he's under no statutory obligation, we cannot say it.
Okay. So if employee has given rightly the form filled, so it is not necessary to give the evidence.
It is not on the obligatory on the part of employer. He can rely on that particular form. It's not statutorily obligatory.
Okay. So there is one numerical question received. I would like to ask to CA Prajakta that employee with a salary of rupees 1 crore per annum, 30 lakhs, contribution to RPF 12.5%, employees contribution rupees 4 lakhs, interest earned over this contribution is 9.5%. But the employee has contributed 40 lakhs additionally over and above 12.5% amount. So what are the impact of interest earned over this additional contribution? Is any tax implication for this additional investment?
Yes. This is a very peculiar question, I'll rather say, and there is an amendment from 2021, with Finance Act 2021, there is an amendment in this particular taxability. So before we go to the amendment, let me start with the section 17, which even Moshmi ji has mentioned earlier while giving an overview. Section 15 is a charging section, but section 17 gives us the meaning of salary. So it includes salary, perquisites, profits in lieu of salary. And in that particular section, it is also mentioned that the annual accretion to the balance at the credit of RPF, employees RPF, will be taxable as a salary. Annual accretion, that means the interest which is earned over the RPF will be taxable as a salary. Having said this, there were two sections which were giving exemptions for this accretion. So there were two sections, section 1011 and 1012. So with the Finance Act 2021, what department has done is they have inserted a proviso to these two sections. So what used to happen is this particular amendment has been introduced to curb the tax planning route of HNIs, high net worth income people. So those who are having clients of HNIs, this particular provision is basically for them. And the arithmetical thing which was mentioned by Praveena ji, let me come to that. So a person is having 1 CR per annum salary. So he comes into HNI and the basic salary is 30 lakhs. So we all know that excess of employer's contribution over 12.5% of salary is taxable. So there is no change in that. So if you compute 12.5% of basic salary, approximately it comes to 4 lakhs. Let us assume that it comes to 4 lakhs. Now the interest earned over whatever contribution has been made to the RPF earlier was totally exempt. Okay, now in this particular case, this HNI, high net worth income client, has contributed rupees 40 lakhs towards RPF, recognized provident fund. So, this was the best route where you can invest 40 of sections available for salaried clients. So exemptions, deductions are very less. So this was a best tax planning route for HNIs, which was available earlier. Now this particular person has invested, contributed 40 lakhs towards recognized provident fund. Now what are the taxability impacts? So I have already told you the old provision. Now the government, with Finance Act 2021, they have made a change, and what they intend to do now is interest accrued on employees' contribution to the RPF or statutory contribution, irrespective of an amount. It was earlier exempt, but now they have inserted a threshold limit of rupees 2.5 lakhs. So if your contribution exceeds rupees 2.5 lakhs, whatever interest earned over that 2.5 lakhs will be taxable. Now, when this provision came into existence, when the finance bill was introduced, there was a lot of confusion in the minds of professionals as to how to compute this particular interest, because contribution exceeding 2.5 lakhs has to be computed first, and how to go ahead with the exact computations. So government came up with new rule, was inserted, rule 9D was inserted by the department, which mentions about the manner of computation of the taxable interest. So there they are using 2-3 important terms, which I would like to mention here. First term is taxable contribution, then non-taxable contribution, and then threshold limit. So what do we mean by these 3 terms? Let us understand quickly. So taxable contribution means the contribution made by a person to the provident fund account during the previous year 21-22, because this provision is applicable from previous year 21-22. So whatever contributions that are made to the provident fund account during the year 21-22 and subsequent year, which are exceeding the threshold limit, will be taxable contributions. So here again, they have mentioned threshold limit. Now, what is threshold limit? So earlier in finance bill, they have mentioned 2.5 lakhs, but here in rule 9, they are elaboratively mentioned it, and it is saying that when the contributions includes both employers and employees contribution, then the threshold limit is 2.5 lakhs. Rarely, when the contribution does not include employers contribution, then the threshold limit is 5 lakhs. So presume in the case which was mentioned by Praveena ji, there was employer's contribution also included. So the person was contributing 40 lakhs towards the provident fund account, and the threshold limit stands rupees 2.5 lakhs. So 40 minus 2.5 lakhs, whatever interest he will earn on 37.5 lakhs at 9.5% will be taxable as a salary, which was earlier exempt. So बहुत बड़ा झटका है ये for HNIs, because that was earlier exempt. So that was a best tax planning route. Okay. Now my question is, when we as a professional, we are filing returns of such kind of HNIs, how would we come to know that his contribution is exceeding the threshold limit? I mean, I don't find any mechanism wherein we as a professional come to know how his contribution exceeding the threshold limit or not. So like Chitre sir also mentioned in his opening remarks, we are filing online returns on behalf of our clients. So I want to tell this to all the participants that most of you would be doing this, that we must get an authority letter from the client, because the return is being filed through our ID, our IP address. So we must have that authority, and most of you would be getting some declarations from the client, because we do that for our tax audit, stat audit clients, because they are the ABC ka analysis kiya, so they are A kind of clients, wherein salaried clients are maybe B or C class clients. But I would rather suggest that for salaried clients also, we must take these kind of declarations. We must get an authority letter. And along with that, for this particular section, if we can take a declaration from that client, maybe that his contribution to the provident fund is not exceeding the threshold limit or so, along with the all other questions which we usually send to client, this declaration may also serve the purpose and save us from the further facing of the music from the department as well as from the client. Thank you.
Yeah, thank you very much, प्राजक्ता जी. आपने बहुत अच्छे से CA को क्या precaution लेने चाहिए वो explain किया. Nowadays CAs are soft target, so we should be very careful while filing returns of our clients. We should take the information correctly, and we should take all the information, and we should take declaration that client has given us the information, and we have filed the return according to the information given by the clients, because we are not Keval Jnani. So without telling client us all the facts, we could not know. By the way, AIS is one such tool on which nowadays we get many information which the client are hiding from us before, because they are not telling us details about the FD interest they are receiving, or they are saving account they are receiving. So, or even in lockdown, while working from home, many persons or employees have opened online share trading account, and they are not giving us the idea about the transaction they are making. They are making transaction in lakhs of rupees and earning lakhs of profits also, because there are many ups and downs during the this lockdown period. So we have to make a client aware about these provisions also. And now there are many startups, and many employees are working with the startups, and as startup is short of money, they are providing Esops to the employees. So is it different, the startup provision, Esop provision, the startup is different than Esops received from the other company? I would like to throw some light on this by Sachin ji.
Thanks, Praveena. See, basically, we need to look at why Esops has become so prevalent in the Indian market or in any developing country. Reason being, there is always a scarcity of cash outflow for any company, and to retain the scarce skills or to maybe to attract the talent from the market, many times beyond cash salaries, companies do offer stock options also, as a part of hiring of employment. Now, typically, this is very common in case of startups. For startups, basically already they are into a cash crunch position because they are just developing maybe their product, or they are just starting with their services. And to really hire people and retain them in their company, stock options are offered. Now, if we, as I told you in the previous questions that were raised to me, that ESOPs are taxed at the time of exercise, but that is not in a case of a startup, because there was a huge cry from employee side and from the industry as well, that in case of a closely held company, all these generally the startups are closely held companies, and as and when employee exercises the option, he feels the pinch to pay tax on notional gain, because it's not necessary that as on the date of exercise there is some exit opportunity that is available with the startup where employee can sell their shares, and he ends up actually paying taxes on notional gain, and that too based on valuation certificate taken from external experts. So there was a lot of representations which were done to government regarding this closely held company. However, in budget 2020, government made some changes with respect to taxation of ESOP, but that they did only with respect to startup. Now, it's very important for all participants to understand over here that who will be called as a startup. It's very important to first understand that. The new rule of taxation for ESOPs in case of startup says that the taxation for ESOPs is deferred from the date of exercise to the earlier of the following three. First is 96 months exemption. This has been deferred for either for 96 months from the end of the assessment year. Then second condition is till the date employee sells those underlying equity shares to any third party. So it can be either on listing or on mergers as well, or till the date the person is employed with the company who had granted him the option. तो हमें क्या करना है, ये तीन चीजों को पहले ट्रैक करना है कि whether 96 months are over from the date of assessment year, then it would be taxable irrespective of the condition whether exit is available or not. Prior to completion of this 96 months, if employee is selling those shares, then obviously it will be taxable at that point of time. And irrespective of both these conditions, if employee or if the person is ceasing his relationship as employee with the company and he's resigning from the company, then obviously it will be taxed as on the date of resignation. But an important thing comes over here is who qualifies for this startup condition. The guideline says that all those companies who get certification as a startup from DIPP, that is Department for Promotion of Industry and Internal Trade. So mandatorily, the company has to take a registration as a startup from DIPP, and then only this beneficial tax treatment would be available for their employees. Just कोई company कल चालू हो गई है, let's say a company is incorporated maybe 6 months before, and they have granted option. That doesn't mean this beneficial tax treatment would be available to that company because we call it as a startup. It very specifically says that the company need to have certification as a startup from DIPP, and then for a period of 10 years, they can avail this beneficial tax treatment. Thank you.
Thank you very much, Sachinji. I have checked on the Startup India website that many companies or business, they are not eligible to register at startup, but they have make entry as a startup, though they have not get recognition from DPIIT. So the employee have to check that whether he is working with the company which is registered with DPIIT and accordingly charge or pay the taxes. So there are many...
So sorry to interrupt you. As you rightly said, many companies who should otherwise have been provided this beneficial tax treatment, they are not getting this tax treatment just because they are not registered, or they don't get the certification, or they don't qualify to be called as a startup as per the rules of that DIPP. But yes, a lot of representations have been made to government. Hopefully in a year or two, government should come out with a clarification where they may allow this beneficial tax treatments to other companies as well. But as of now, yes, it is, as you rightly said, you need to get that certification, then only you are eligible for this beneficial tax treatment. Yeah, you can continue.
Yeah. Thank you, Sachinji. There are many questions on the house property. As I said, HRA is getting by every employee. So if the property is in the name of one person and the rent agreement is in the name of the another person, then whether HRA can be claimed. So I would like to elaborate this by CA Poonam.
So thank you, Praveena. And also this is something generally in our office, if this salary person are coming, they have a lot of confusion about this HRA, interest loan on house property. This is a common topic of confusion. And here you are asking that that rent agreement has been made on another person's name and property is owned by someone else. So here in example, I can take up like this Mr. A, who is owning a property, and who is the owner of the property, and this property has been let out by his wife, for which the rent agreement is made between Mr. A and Mr. A's wife and the tenant, and here tenant want to like claim the HRA exemption. So first we need to understand here that this agreement itself is a void, because the owner and the tenant is not making, so the tenant cannot claim the HRA also in this case. But we need to understand, if the owner has given her power of attorney to his wife, and then they are making the agreement, in that case this is a valid agreement, and the tenant can claim the HRA deduction. So this is something we need to understand before making this agreement. And generally in case of NRI, a lot of time it is happening that they are residing in another city and they are making rent agreement on his wife's name and with a tenant. So these are the precautions the salaried person should take.
Thank you. Continuing with the question on the HRA, if the rent is paid and also rent includes the furniture, rent, maintenance charges, so is it necessary to make the segregation and claim the house rent allowance?
So here we need to understand that HRA exemption as per 1013 is available for the rent paid by the employee. Employer is giving for the rent payment. So if you are paying for the electricity bill, maintenance charging, or any other kind of rent, furniture rent suppose, so that will not include in the exemption. Only for the rent part you paid, exemption will be allowed. But there may be one of the case I have seen that you have the salaried person has paid to the this owner, and then they are paying house property and other expenses. In that case, you are paying in the lump sum. So whatever the rent you are paying, you can claim as an exemption.
Yeah. Okay. Thank you, Poonamji. So going further, there is something called new tax regime and old tax regime. So I would like to explain, Maushmiji, about this. Should employee go or pay taxes according to new tax regime or old tax?
Nowadays, salaried employees do call chartered accountants, especially in the first quarter of every year, saying that, ma'am, our company is asking whether to opt for new tax regime or old tax regime. And as somebody mentioned, that these people have already researched somewhere what is old regime and new regime. They say that assuming that an employee has a salary of say of 11 lakh rupees, he can see under old regime, the tax rate is 30%. Under new regime, the tax rate is 20%. So for him, he thinks 10% would be beneficial if I go for the new tax regime. But without a detailed study, you cannot take this call. The reason being, if at all you opt for new tax regime, definitely, especially for this 11 lakh salary employee, the tax rate would actually come down from 30 to 20. But then he'll have to forego various deductions, exemptions that he would have claimed under the old regime. Under the new regime, the employee cannot claim the standard deduction that he gets under section 16.1. He cannot claim reductions under 16.2 as well as 16.3. He cannot take a deduction for HRA. No HRA deduction would be allowed. No LT allowance deduction could be allowed. ATC benefit cannot be taken. ATD mediclaim benefit cannot be taken. If at all any donation is given, ATG deductions cannot be taken. Any interest that he is getting under savings account, he cannot get a deduction for that as well under section 80 TTA. If at all he is a senior citizen, he is not eligible for 80 TTB as well. So various such deductions will have to be foregone by him if at all he is going for the new tax regime. If at all he has a housing loan and he is claiming a deduction under section 24B for the interest part, then that will also not be allowed under new regime. So if you see the new regime, tax rates look attractive, but then the assessee has to forego various deductions, exemptions that he is claiming under various heads. So until and unless a detailed calculation of your taxes and income and deductions and exemptions is not done under both the method, you cannot give an answer. So there's no 1 + 1, 2 answer. You will have to calculate it separately for every employee, understand the types of the components of his salary, what type of salary he is getting. At the same point of time, also we have to understand what are the various deductions he would have claimed under house property as well as chapter 6A. Do the calculations and then we'll have to suggest the assessee. Another thing I would also like to add over here is, especially salaried employees can keep on moving from old regime to new regime every year. So every year they can switch. Say this year it was old, next year they can do new. Again, they can come back with old. So over there is no limit. Every year they can see which is beneficial to them, that they can opt. One more thing I would like to add is whenever these employees, they come to us asking which regime should we choose. And based on the information given by the assessee, if we have done a few calculations and if we have arrived at the opinion that old is better for him, and over a period of time things change and some figures may also change, while filing the return, if we feel that no, now this time new regime is better, at the point of time of filing the return, we can definitely change the option.
Okay, so this is better or this is beneficial to the employee that if he had chosen first one option at the time of giving information to the employer, and then at the time of filing he can change the option. So how many times he can change the option? So this year he go for old regime.
There is no limit. There is no limit. Every year he can choose the option whichever is beneficial to him. So every year the option can be changed.
Okay, good. That is very beneficial provision to the employee, and he can take the decision and make investment accordingly. So many times the person has joined the company as a consultant or provides some professional services, and then if the services are liked by the company, then company joined him as an employee. So what are the provisions? I would like to throw some light on this by Mronalini. The specific question is received from the participant that he was employee of the company and was deputed to US, first as an independent consultant and then as an employee. During his deputation in the USA, the company granted a stock option where under Mr. X was given the right to purchase the shares of the company at the exercise price, or a cashless exercise of a stock option. Whether the income from the earned from the exercise of the stock option can be treated as income from the salary in the light of provision of section 15. He had first joined as a consultant and then joined to the company as an employee.
Okay.
Yes,
I'm audible.
Yeah. Yes, you're audible.
Yes, so this criteria, this normally happens whenever the employees come and they feel the company is good and then just join it. Now I'm presuming this in this question 2 criteria. First, I'm presuming that the employee first joined as a consultant, then was the employee and got the stock option to purchase it. That is to say that first case, I'm presuming that he was the employee of the company when he got that particular option. So when in particular case he was the employee, the employer and employee relationship was existing, and hence as per the charging section, the income would be taxed under his hand. However, another purview could be when he was operating as a consultant, when he was operating as an independent consultant, and the company offered him the what we can say the employee stock options. Then in that particular case, there wasn't existing any relationship between them. There was no charging section, there wasn't any relationship, and hence he just got it on the basis of his consultancy and on rendering his professional services. So in the second case, if we see that then in that particular case, it won't be taxed as an income from salary, but it would be taxed under his professional fees or some other head. But if he was the employee at the time when the stock options was given to him, then definitely it would come under purview of section 15.
Okay, right. So we have take the decision according to the position when he is receiving the stock option.
When he was offered the stock options. Yeah.
Okay. So now I would to ask to Pritaji that there is some doctor and he's receiving some from the hospital on monthly basis. His payment is fixed term and not dependent on the number of patients examined by him. What are the what is does it come under the purview of the salary? CA Prajakta?
Yes. Yes, let me answer this question. And before answering the question, as Mrinalini ji has also mentioned about section 15, let us briefly have an overview of what tantamounts to salary, which is mentioned in section 15. So it mentions salary due from employer, existing employer or formal employer, whether paid or not paid. So payment of salary is not important, whether due, paid or not paid. If salary is already paid, though not due, that means advance salary, that also forms part of section 15. Then any arrears of the salary. So we all know that there is a relief for the arrears of salary, but if arrears of salary are received in a particular year, and if they are not already charged to tax in the year in which they for the year in which they pertain to, then that is also forming a part of your salary. So that's what section 15 mentions. And I made mention about section 17 also, which explains the meaning of salary. So here, the particular case which Praveena ji was asking is a doctor who is engaged with a hospital on a monthly basis. So we have to first look at the employment contract which has been entered into by that professional and the hospital and his employer. So the nature of the contract has to be verified in detail in such a case. Now, there can be a clause in the agreement which allows that particular professional to practice independently. ऐसा हो सकता है, he can practice independently along with the employment. But to establish the relationship between the employer and employee, we need to in detail study the clauses of the employment agreement. Now here I want to make mention of one case which we all know, wherein commission forms part of employment. We all know that classic case. We have been studying that gestational duplicator. We have been studying that since we were doing CA. So commission forms part of your salary. Let us take an example that there are two agreements by the employer. One forms part of salary and one explains that the commission is being paid to the employee. Even if there are two agreements, then also commission would form part of salary only. So that is just to make a mention. Coming back to the case wherein doctor is working, he is not getting the salary remuneration based on the number of patients examined. As far as the provisions are concerned, what I think is whether the amount is fixed or not. it's not so material. What is material is the terms of agreement. I mean, we have to also look at this case from the professional's point of view. If that particular doctor is my client, then we have to also take into account whether he is associated with many such hospitals. I mean, if he is associated with many such hospitals, there would not be employer-employee relationship. He may not be devoting that much time to each hospital. Then he will be treated as a freelancer there. Because when we are segregating between salary and professional fees, TDS provisions also comes into picture. So whether the TDS has to be done under section 192 or 194J, that is also a question. Whether that particular recipient doctor will that remuneration be charged under the head of salary or PGBP? Can he opt for 44 ADA? That is again the subsequent question. So from my point of view, is he engaged with other such hospital? That is one thing that has to be checked. If he is not engaged with other such hospital and if the terms of employment provide so, then he can have that employee obligation established and it can be treated as a salary.
So can we say that if the employer has deducted professional tax from his salary or from the amount he has paid, he is employee of the salary, can we say on the basis of the deduction of the professional tax by the employer?
Okay. So profession tax, which we often say in Maharashtra as a profession tax, is basically a tax on employment. So let me come to the origin of this tax on employment. So this is a particular provision which has been allowed to states. I mean, states can levy such tax on employment, which we in Maharashtra, we are terming it as profession tax. But in various states, it can be, nomenclature can be different, but basically this is tax on employment. So there are two kinds of registration which employer needs to get for deducting employees tax on employment. He has to get employer's registration. Apart from that, this tax on employment does not necessarily tantamounts to only employment tax. I mean, we all are aware that we chartered accountants and all the other professionals also have to get ourselves registered and pay the tax on employment, profession tax. We need to pay that. So the nature of tax on employment has to be checked first, whether doctors tax on employment is reimbursed to the doctor in the self capacity, or is his employer deducting his tax on employment as an employer's duty. That has to be checked. One more point is, if employer is registered as an employer's PTRC, जिसको बोलते हैं हम, so if he is registered like that, then the employer and employee relationship is evident, and then definitely the remuneration which is being paid to that doctor would tantamount to salary.
Okay. Thank you very much for throwing some light on professional tax also. He should check whether the tax is paid as PTEC or PTRC. Okay. So till now we have checked the Esop option received by the Indians from the foreign company. Now there is one query received that if a person is a foreign national and working in India and he get Esops in India, so what will be provisions of taxation? I would like to throw light on this by CA Sachinji.
Yes, Pravina. See, now first important thing to note is whether the foreign national, whether he is working for an Indian company or whether he is on deputation for any overseas company and he is on deputation in India for a few months. Now, of course, if he is employed with the overseas company and is on deputation in India, then it won't be taxable over here. But let's specifically speak of a case where the non-resident employee or the foreign national is employed by an Indian company. So first thing is whether RBI allows granting options to such non-resident or foreign nationals. So yes, RBI does allow Indian companies to grant options to such foreign nationals. Now, as far as taxation is concerned, it doesn't make a difference whether the person, whether he is a foreign national, an Indian resident. So even in this case, the stock options would be taxable over here in India, and they would be taxed as on the date of exercise only.
Okay. And what will be the exchange rate on which the tax is calculated?
Okay, so now this will be typically applicable in case of employees getting stock options of some overseas company. Okay, so let's what I presume is the person is an Indian resident and he has received stock options of the overseas company. And what exchange rate do we use to calculate the perquisite value? So the point to be noted over here is the date of exercise. We need to track the date of exercise and use the exchange rate as on the date of exercise to calculate the perquisite value, irrespective of when actually fund is sent overseas for exercise of option. Because when you give the intimation to the bank, the actual funds flow may happen a day earlier or a day or 1 day later as well. But the date on which he intimates his parent company about exercise of option and actual shares are issued in his name, that date's exchange rate should be considered for the purpose of calculation of perquisite.
Thank you very much. There is one more question for House HRA. I would like to ask to CA Poonam to give the information about this. That is, Mr. X took accommodation on rent, belonged to his employer and paid rent thereon to the employer. An independent rent agreement was executed between them. Further, he was receiving HRA from his employer. Whether the same can be treated as perquisite in the terms of section 17(2). CA Poonam?
Yeah. So thank you, Praveena. And here, as I'm understanding the question, they want to know whether this transaction will come into the perquisite or not. So before understanding that, we need to understand what is the perquisites. So perquisites are benefits that are over and above an employee's salary. So any kind of benefit an employer is providing to the employee. And there is need not to be necessary that should be any agreement or something. If any voluntary benefit is given by the employer, then can come into the perquisites. And if employee's unauthorized advantage is taken from the employer, that will not come into the perquisites. So in our case, our SSC has made rent agreement with the employer, an independent rent agreement, and also they have paid rent also. So there is no any additional benefit or any concession in the rent is given by the employer to employee. Hence, it will not come into the perquisites. I hope it's clear. You are on mute, Praveena. Praveena, you are on mute.
So he has rent paid legally, so he can claim that, right?
Yeah.
Okay, so there is a same question. The question is for the Mrunalini, that there are many LIC agents who received fixed sum as incentives, or there are development officers who received fixed salaries and they also received incentives or bonuses, and they told that they can claim expenditure for the development of the business from these incentives. So is it allowed, expenses from the bonuses they received? Mrunalini?
Yes, Praveena. Yeah, this is a very common case, not only with the LIC agents, but also with all types of safe personnel. They get the incentives for their performances. They say that, ma'am, we have received, say, a commission or a incentive for performing well, and we should get the deduction of the expenses, whatever we have incurred so far for earning that particular thing. Further, it is also not fixed. Logically, all appears to be correct, but we need to see the provisions of section 17, which correctly tightens them all, and they have inclusion, and it says that all the types of fees, commissions, perquisites, or profits in lieu of salary that you are getting, or profits in addition to your salary and wages, they all would be covered under the term salary. So when we say that whatever the incentive that they are getting, that is ultimately is being covered by section 17 under the term salary itself. And when that is covered under the salary earners have no other choice other than to claim deduction as provided under section 16. So they cannot go and claim the deduction of the expenses as provided in another head, that is say PGBP, for earning that particular income, but they have to take the deductions under section 16 only. So in this particular case, though he has received that bonus, but that is again his salary only, to claim the deduction from section 16 only and won't be able to claim the expenses deduction.
Yeah, thank you very much, Mronalini ji. So the taxpayer should be careful that whatever deductions are allowed in the form 60, and if he shows salary less than that in his income tax return, then there is risk that maybe he get notice for the clarification that why he is showing salary less than which is showed in the form 16. So if we want to claim any exemption, he should give that information to the employer in the month of February itself, so that he can consider while filing their TDS return, and everything will be covered in the form 16. Yeah. Thank you very much. So now I received one question from the participants that it is for repayment of housing loan. That repayment of housing loan includes interest and principal also. If there is a loss on account of this, can this be set off against a salary? I would like to give the answer by CA Moshmi.
Yes, under the head house property, you are allowed to take a deduction under section 24B for the interest part that is paid throughout the year. Now, because of this interest deduction, there could be a loss under the head house property, and this loss can be set off against salary. Whenever the EMI is paid by the employee for the repayment of housing loan, this EMI would consist of principal plus interest. Principal goes under section 80C. Whatever principal is paid, has accrued throughout the year, can go under section 80C. Whereas interest accrued will come under section 24B. I have mentioned interest accrued because interest may be paid, may not be paid. The moment it accrues, 24B becomes applicable. So once deduction under section 24B is taken, then there could be a loss which arises under the head house property. And this loss can be claimed, can be set off against your income from salary.
Okay. So the employee should be careful about the deduction he is claiming and getting the eligible deductions from his salary income and pay tax rightly.
Yes, yes. And in fact, I would suggest that whenever we have an employee, and especially if he has any housing loan going on, then that should be reported by the employee to us so that we can give him that benefit by claiming it in the return. If he doesn't mention about the housing loan repayment, then probably he would lose over this set off.
Okay. Thank you very much. So this question is very close to heart of all the employees. How can he can tax here, structure here their salary so they can pay minimum taxes, or that is how they can make the tax planning rightfully and save the taxes. So I would like to answer this question by CA Prajakta. How change in the salary structure can minimize the tax incidence on HRA, gratuity, committed pension, etc.
Yes. So yes, as Praveena ji, you have rightly said that close to heart question, because even Moshmi ji mentioned that often salary clients comes to us for asking tax planning hints, and we are having like in salary, we are talking since last 1.5 hour, but there are only 3 sections which are there in the salary, and exemptions under section 10 and deductions under 80. So only a handful of sections we are having for tax planning of a if we compare it with the PGBP income, maybe there are a few tax planning things which we can suggest, but in salary, we are having a lot of limitations. So this question basically, I would like to answer from company's point of view also. So if you have clients and I mean, you are providing the consultancy services or maybe the payroll processing services also, how the structure can be designed so that there would be minimum tax incidence over HRA, gratuity, commuted pension and all. So if we have a look at the definitions which are mentioned in HRA, gratuity and commuted pension for salary, I mean, what amounts to salary for a computation of HRA exemptions or maybe gratuity or commuted pension exemption. So there is one thing which is very common, and this is very simple thing that I am going to tell you here, but this is very important as well. One thing that is common in all three definitions is the salary means basic salary and it includes dearness allowance if terms of employment so provide. So whenever the employment agreement is being undertaken, if the dearness allowance forms part of your basic salary, I mean, this particular line has to be mentioned in the employment agreement. Otherwise, dearness allowance is as good as any other non-exempt allowance which we are getting. So like we are getting maybe air hostess get a kit allowance or wardrobe allowance. It is same like the other allowances which the employee is getting, unless you have that mention in the employment agreement that dearness allowance forms part of your basic salary. So this is a very important thing from company's point of view also, and from employees' point of view also, that has to be checked. And at the same time, if dearness allowance is already forming a part of basic salary, then that can be a best salary structure wherein the tax incidence on HRA, gratuity and commuted pension can be minimized. Why so? Because if it is forming part of your basic salary, naturally you will get the higher deduction. So I think this is one more tip to what we usually give to our clients that can be done. And if you have a company with you and you are filing employees return as well of the same company, you can very well exercise this particular thing so that there will be a win-win situation for both the employers as well as the employees.
Thank you, Prajakta ji. You explained very well how tax incidence will be minimum on the taxpayers. So now there is one more question on Esops, and it is having some numerical figures. Mr. A is an employee of a listed company. He has received Esop at an exercise price of 25 per option. When and how shall Mr. A be taxed for Esops?
Okay.
I would like to answer this question.
Thanks, Pravina. I think the very first query which was read, we had answered how a ESOP gets taxed. But for clarity of everyone, let's take some numeric figures. So as I told you, there are 4 stages in ESOP: the grant, vesting, exercise, and sale. Let's say as on the date of grant, the fair market value is 100 rupees. As on the date of vesting, the fair market value is 200 rupees per share. As on the date of exercise, it is 300 rupees. And as on the date of sale, it is 400 rupees. Now, in the query which has been raised, the employee has received options at exercise price of 25 rupees. Now, as I told previously, he doesn't get taxed as on the date of grant. He doesn't get taxed as on the date of vesting. But first time he will get taxed as on the date of exercise of option. Now, in our example, I have presumed that the fair market value as on date of exercise is 300 rupees. So difference between 300 and 25, that is 275 rupees will be taxed as perquisites in the hands of the employees, and he will end up paying taxes as per the applicable slabs to him individually. Now, in future, when he sells these options for 400, or when he sells the underlying equity share for 400 rupees in the market, he will be taxed only for the additional gain of 100 rupees. That is the fair market value as on the date of exercise. So difference between 400 and fair market value as on date of exercise that is 300 rupees. The difference of 100 rupees will be taxed as capital gains in the hands of the employees. Company will have to keep a track of only till the date of exercise, because when it's taxed as a perquisite, it becomes a part and parcel of your Form 16, and company has a liability to do TDS on that. However, employee will have to calculate his individual capital gain tax as on the date of sale of share, and he will have to pay tax on that as and when he sells those shares. I hope with these figures now it makes very clear about taxation of Esops.
Yeah, you have explained very well about the taxation of Esops. There is another question which is I would like to answer by CA Nonalini. Whether the salary for a certain period, though claimed by the employee and entered in the books of accounts, but is not disputed, given by the employer, was disputed by the employer as not payable. And when the matter is pending before the arbitrator, what will be the implication on the taxation of such salary? That is, salary is disputed.
Okay.
So,
yeah, Pravina, I just request you to clarify that whether that particular amount has been recognized by the employer or not.
Just a minute. Yeah, okay. The salary is not recognized by the employer.
Yeah. So, as per the charging section, section 15, which says that the amount is required would be taxed under the head salary when it becomes due and accrued, that is. So it is not, incidence is not only upon the payment, but also upon the accrual. So even if the particular amount is accrued, then in that case, the employee is also taxed. Now the question arises in this particular case that employer is not recognizing that particular amount. Employer is not recognizing that expense as a salary in his books, and only employee is recognizing that particular amount. So in this particular scenario, when it is not accrued, when we cannot say it accrued because it has not been recognized by the employer. So prima facie condition is one who is paying it should at least recognize that particular thing. So when it is under dispute and it is only presumed by the employee, then in that case he has in our question has approached the arbitrator, and till the time the decree or award or in something is directed by the arbitrator or by the particular authority, till that particular time it would be wrong on the part of employer or employee to book it as an income and to book it as a salary. Only when that particular case is disposed of or it is award has been given, then only that particular amount can be booked, because the person who is paying it is not recognizing that particular as an expense. So it cannot be said to be accrued, and hence it won't be taxed under the head salary.
Okay. Thank you very much, Monamini ji. So there is another question, and I would like to answer it by Poonam. That if a school was providing concession to the children of its employees on the rent of transportation facilities, whether such concessional amount would be treated as perquisite under Section 17. The rent on transportation facilities for the children of the employees. CA Poonam?
Yes, Pravina. So in this case, the school is providing concessional transportation to the employees' kids. So here we need to understand this perquisite. Any benefit above than the salary is given by the employer to employee comes in the perquisite, and here the employer is the school, and they are providing concession to the children of its employee. So I think it will be taxable, and it will come into the perquisite.
Okay. Thank you very much. There is question for the Prajakta ji. Salaries paid to the partners. What is its taxability impact? Prajakta ji?
Okay.
Yeah.
Yes. So let me tell you, I have one very junior CA, and he was handling one partnership firm, and wherein he was showing, of course, tax audit case was that, and he was showing some remuneration to the partners and some fees paid as a professional fees, wherein they are also deducting TDS and GST and other
Recording in
remuneration
progress.
by whatever name called, whether due or received by partner of a firm from the firm, will not be regarded as salary for the purpose of this section. I mean, the explanation is very clear in its wording that any remuneration paid to the partner would not amount to income under the head salaries. Because we also know, when we go to the PGBP sections, we also know that salary paid to a partner is the appropriation of profit, basically. So it is very evident that salary paid to a partner is not chargeable under this section, section 15. So it will not be taxed under the head of income from salaries, but it will go to PGBP and it will be taxed there. Later on, it has to be checked. The further provisions of PGBP needs to be applied to the remuneration paid to the partners. But definitely, it will not be charged under income from salaries.
Okay. Thank you very much, Poonamji. So there is another question for Sachinji, that an employee is employee of a closely held company, XYZ Private Limited. So is the taxation is different in this case from the not closely held company or company not listed on the stock exchange? And what documents are required to calculate this perquisite value?
Okay. So over here, first thing is taxation for Esop is not linked whether to the nature of the company. I mean to say whether the company is a listed company or an unlisted company or a closely held company, with only exception of startup being recognized under DIPP. So keeping aside those startups, the taxation for Esops is same. Now, in case of, I think this question is coming from the previous question, which was raised about calculation of perquisite. So what I understand is the participant has in mind that since the company is a closely held company, how do I calculate the perquisite value? Now over here, rule 11 UA comes into place, which says that in case of a closely held company, we need to take valuation certificate from a merchant banker or an accountant, and based on that valuation certificate, the perquisite value will be calculated in case of the employee employed with a closely held company. Now, further in Rule 11 UA, there are various methods which have been prescribed for calculation of the fair market value. Now, based on the situation, we will have to determine whether we use a discounted cash flow method or a net asset value method to calculate. But the external expert will have to be appointed by the closely held company, and the certificate that he will provide, that certificate will be taken as a base for calculation of the perquisite value. Over to you, Praveena.
Thank you very much. I think this has solved the doubt of the participants. There is another question. I would like to answer it by Prajakta ji. Please explain the provision of section 89. Because many employees are receiving arrears of salary in 1 year. So maybe he's having salary 5 lakhs, 6 lakhs. He has not paid taxes over the years and he has received arrears, and in particular year he received 12 or 13 lakhs. So the heavy amount of TDS is made. So can he get relief under Section 89?
Yes. Very good question. And yes, income tax has given relief under Section 89. There is a peculiar way in which this particular relief is computed. Let me tell you one thing here, Praveena ji, that we as a professional and practicing CAs are a lot more dependent on the softwares for, especially for salary computation. Even companies have, most of the companies have outsourced their payroll processing. So that is also being taken care by the softwares. And we at our offices also are using some or the other kind of softwares. So through which these calculations are done automatically. I mean, they have certain things which are programmed in these softwares, and the answer is there in front of our screen. But we as a professional must brush up all these things. So it is very good that DTC have arranged such kind of session wherein we are gone to basics, back to basics, I will rather say. We are understanding section 15, section 17 in detail and discussing the cases here. Coming back to your question about relief under Section 89. So let me take an example where government has come up with sixth pay commission, and they have given arrears to all the government employees since maybe last 6-7 years. So एकदम से amount उनके हाथ में आ जाता है, how to compute that relief under Section 89. So what we have to actually do is that additional salary, because we have already seen in the definition of salary that arrears of salary also forms part of salary. So we'll term this particular arrears as additional salary. So whenever that additional salary is received in that particular previous year, there are two steps that we need to compute. First is your tax on total income, including the additional salary. Then tax on total income, excluding the additional salary for that previous year in which the additional salary is received. Then we need to find out the difference between the two. So let's say the difference between the two comes amount A. Okay. So this is amount A is the difference between additional salary received, or tax on additional salary received in the previous year, and without the income, additional income included in the previous year. So we have arrived at amount A. Let us now go to the earlier years in which this particular additional salary should have been charged to tax. So let's say last 5-6 years का arrears अगर आपको मिला है, वही साल में अगर ये salary include की होती तो taxation पे क्या impact आता. So we need to calculate that tax amount, and we already have the tax amount for those preceding previous year without additional salary. So we need to find out those two taxes. Difference between these two things will arrive at amount B. So initially amount A and now amount B. And if this amount A is exceeding the amount B, then you will be able to get the relief. That is the relief amount, I would rather say. If the amount A is less than the amount B, then you are not eligible for relief. So this is how the relief is calculated. There is one form 10E, which needs to be filed for this relief calculation. And there is a lot of information, by the way, which we need to get from client while we are computing the relief, because arrears pertains to maybe 5-6 years, previous years. So you need to get all those returns from the client. You need to compute, matlab detailed returns you need to get. Not only the first page, the acknowledgement page, but you need to have the total income computation for each previous preceding previous years. So that is the information you need. So what I suggest is get the declarations from the client and then do the relief calculation. Yes, I hope I have answered the query, Praveena ji.
Yes, and employee can have the option to give this declaration at the time in February itself. So the employer will not deduct tax from these additional arrears he received, and the tax is saved, he can claim the refund after filing the return. But for that 3-4 months, the cash liquidity is blocked with the government.
Yes.
Thank you very much. There is one question which I would like to ask by Mrinalini ji, that the amount received by assessee under non-compete agreement after cessation of employment for not sharing secrets of the trade with the third party, and particularly to the competitors, will it be treated as profit in lieu of salary in terms of section 17(3)(3)? The participants is very knowledgeable person. He have mentioned section also in the query. Mrinalini ji?
Yeah, I'm audible now?
Yes.
Yeah. So, the important ingredient in this particular case also that we need to check, first of all, the non-competence agreement that has been entered into by the company with that particular consultant. See, if this non-competence agreement is restricting that particular person that not to share whatever the secrets of the company has with any third party, then in that particular case, yes, that would be a case. But if it is just if it is for non-competence agreement, it is restricting that particular person, that is a different part. But it is only for the purpose of termination or just to compensate the loss. See, the definition of salary covers this particular aspect, that the amount is being paid in the lieu of salary in order to compensate that particular person. Then in that case, it would get covered under section salary, that is income of salary. However, but this amount is for the restrictive covenant and for not allowing him to compete with any other person. And also, as I heard, if I heard correctly, the amount has been paid after the cessation. Then in that particular case, as the relationship is not existing, then in that particular case, this amount won't be taxed under the head salary, but it would be taxed under the head other sources for that particular person.
Okay. Thank you very much, Mrinalini ji. You have explained very well.
There is some network issue on Praveena's side, I think.
Yes.
Yes. Praveena ji, you're not audible.
So really today we all have gone to the basics of the salary and a lot of knowledge from all of you.
I think Pravina has some technical issues. So in the meantime, I would request on behalf of all panelists that if any of the participants have any other query, maybe you can put that in the chat box, and either of the panelists we can really try to answer your queries over here.
Praveena ji, are you there?
Yeah, actually there is some network disturbance. I'm telling some story that nowadays employees are not hired on the basis of the skilled or how the success stories, but the stories but the situations which they how they overcome and face that. So there is little network glitch in my side. So I'm extremely sorry for that purpose.
No problem, प्रवीणा जी, no problem. टेक्नोलॉजी के बेनिफिट भी है और कुछ नुकसान भी है.
I think she's not seen again.
Yeah.
I think Pravina has some real major problem.
Actually, there is some network. It is raining here, so there is some network issue.
But Pravina, you are audible. Maybe we can continue this way as well.
We can continue in this way only.
Yeah, okay. So there is next question is about the leave travel concession. So can it claim for the foreign travels also? Yeah, Moshmiji, I would like to answer you this question.
Leave travel concession can be claimed only on travel expenses on domestic travels. So for foreign travels, LTA exemption cannot be claimed.
And can we claim it?
Sorry, I can't hear you.
She is not here. She's joining again.
In progress.
Okay, there is one question which I would like to answer. The question is about the salary paid to expatriate. So let me first myself brief the question and then I'll go to answer. So income tax on salary paid to expatriate to India is borne by Indian employer, and tax impact in the hands of expatriate and in the hands of Indian employer. So we need to check for the tax impacts in both the hands. I think Pravina ji is here, but she is not audible. So shall I continue with the answer to this question?
Continue. Yes, please.
Okay. So let us first understand what is the meaning of expatriate here. And when I was searching for this expatriate meaning, we need to derive from the common parlance, and it can be read as a person based in the foreign country working in India, or a person based in India likely to be an Indian citizen but working abroad. So it can be inbound or outbound. So that is what expatriate means. If we really go by the word patriate, so he has to go back to his place. So let us take an example that there is a German company who is having a manufacturing unit in India, and they have called MD, expatriate, who has come to India and the company is paying salary to that expatriate. The question further asked is, what if the tax of that expatriate, tax of that MD is borne by the company? What are the effects? So we have already discussed in the previous session that we need to first check about the residential status of that particular expatriate. Residents, global income, worldwide income is taxable. NR are taxed only on income that accrues or arise or deemed to accrue or arise in India. So we need to first check for the residential status of that expatriate. That is very first thing that you need to do. Then obviously you have to get his PAN in India and then further taxability. I'll not go into the details of the taxability of expatriate because there are 3 kinds of agreements that needs to be mentioned and it will take a lot of time. But I'll come to the question directly. What if the tax is borne by the employer, by the company? So you all must be knowing that there is one particular section which exempts tax on non-monetary perquisites. That is section 1010 CC. So taking the benefit of that particular section, when company is paying tax on behalf of employee, this particular section basically comes into picture. But when you need to go for the exemption in this section, the question which arises is about the loop, because you need to calculate the income tax, and again then how can you calculate the perquisites value? So you end up into that particular loop. So the tax on such income, which is actually paid by the employer at the option of the employer on behalf of the employee, there is no such exemption which has been granted for this particular perquisite. I mean 1010C में उसका exemption नहीं मिलता है because of that loop. Now let us come to the employer's part and understand जो tax employer ने bear किया है उसके लिए whether he will get the deduction for that particular expenditure or not. So in my point of view and as per the sections also, he will not get the deduction for this particular tax which has been borne by the employer, but that will be the cost to the employer. So if you go to section 40A, you will come to know that this particular deduction is disallowed. So yes, I hope I have answered the question. Over to you, Praveena ji.
Yeah. Thank you very much for elaborating the provision in such a detail. There is another question which is I would like to ask by Mronalini ji, that if a person was working as a nun or priest in a Christian educational institute, he handed over the salary received to their religious congregation according to their religious calling, whether it would be still taxable in the hand of Mr. A, and whether the institute is required to deduct tax at the source under section 192.
Yeah, basically, we need to see the provisions of income tax for answering this particular question. The income tax is on earning the income. So it is irrespective whether that is being earned by a particular religion or a particular, say none in our particular case. So it gets irrespective. So even section 192 doesn't provide any such criteria that say if it is being incurred or it has been paid to some particular category, then you don't have to deduct tax. There is no such provision. Section 192 clearly states that if you're paying a salary, then you have to deduct tax. So there is no provision in the law, what we can say, that which states that if the amount is being paid to a nun or a priest, we should not include it or we should not form it a part of salary. Is it anything more that I have not covered in this particular question, or was that all?
Yeah. If I can add something,
yeah,
Praveena ji, if I can add
yes.
something. Actually, section 15, the charging section, it says that salary is charged on due basis, whether it is received or not received. So the moment the person has earned the salary, the moment it is accrued, immediately taxes become applicable on that. And if at all he has foregone the salary or surrendered the salary, that doesn't reduce his liability from that salary actually. So moment the salary accrues to him, whatever he does with that salary is a secondary thing. Salary accrues, taxes will get applicable.
Okay, thank you very much for adding that. I want to say that if any participants' question are not getting answered in this session, till they can post their question in the session, and the Direct Tax Committee will, I request Direct Tax Committee to come up with some publication in which all these queries of the participants will get answered. There is another question, which is I would like to answer CM Oshmi ji. Can conveyance be claimed as lived LTA?
No, the local conveyance expenses cannot be claimed under LTA. LTA is allowed only if the employee takes a holiday, takes a leave, goes for a holiday, and only the travel expenses to that holiday destination can be claimed under LTC, but not conveyance.
Okay, thank you very much. There is another question regarding salary received from foreign company. The question goes like, can a non-resident living in a Singapore and working for an Indian company from Singapore and receiving salary in her Indian bank account claim the benefit of DTA with Singapore and not pay tax in India on the salary received in India? I would like to answer this question by Sachin ji.
Yeah, see, Pravina, as I understand what your the query is that the person is based in Singapore. So I presume he's a resident in Singapore. He's working from Singapore for an Indian company and his salary account is open in India. So can he claim the DTA benefits for whatever taxes he's paying in Singapore over here in India? So first thing is DTA benefits would be available for local residents over here. Now, since the person is a non-resident in India, first is we will have to refer to the DTA agreement between Singapore and India. And as per that, if salary is being taxed by the source country, then first the salary will be taxable in India. The person will end up paying taxes in India. And then maybe while filing his returns in Singapore, he can claim the double taxation avoidance agreement and relief for taxes paid in India in Singapore. It won't happen the other way around. Okay, so first that source would be taxed in India and then it will be taxable over there in Singapore, since he is a resident over there in Singapore, and presuming even in Singapore the global income of residents in Singapore is taxable. Secondly, it will be taxed over there in Singapore and there he can claim the DTA benefits over there.
Thank you very much. So we have covered almost all questions we have received from the participants. And if after this session also any participant is having any question, they can write to the Direct Tax Committee, and definitely they will get answer for their queries. And I request Chitale sir and Direct Tax Committee also to come up with some publication for the benefit of the salary earners. Those the number of returns filed by salaries are much more than the business returns and any other form of the returns. So it will be beneficial for all the salaried person, and it will solve their, it will be compilation and all their questions will get resolved at one go on. So I would like to tell the participants, if they are having any additional question, they can mail it to dtc@ici.in, so that our panelists can answer their questions after this session also. And I would like to say, if panelists add any other point to the questions we have covered so far, then they can unmute themselves and tell to our participants for the benefit.
Pravina ji, I would like to add, since there were a few questions on LTA, whether conveyance is allowed, whether foreign travel is allowed. One more thing that is there is LTA exemption under section 10(5) cannot be claimed every year. Though the employee may have taken holidays, may have traveled, may have incurred expenses on his travel, he still cannot claim it every year. He can claim it in a block. He can claim it twice in a block of 4 years. Now, when I say block has nothing to do with financial year. A block is a calendar year. The first block started in the year 1986. So currently we have a block which is 22 to 25. Earlier it was from 18 to 21. So from the block 18 to 21, he can claim only LTC twice. And 22 to 25, again, he can claim this LTC exemption only twice. So maximum twice he can take it. The carry forward provisions are there. One exemption can be carried forward to the first year in the next block. So according to that, the employee can take the benefit.
Okay. So through our discussion, we get many options or many questions which are in the mind of the taxpayer get cleared. And if there are any other questions, they can ask. And I request to panelists, if they want to elaborate in any other point which is not covered till today's discussion, they can explain.
Yeah, Pravina, I had one point to be made. Now, in case if any of the assessees of any of the participants, if they have received stock options of any overseas company, then make sure that you declare the details of stock options they have received in the IT return. Because typically we are aware that if the total income is crossing 50 lakhs, then only we give details of assets and liabilities. However, if the person is holding any foreign equity or any foreign investment, then he needs to declare that in the IT return, irrespective of the income that he is having. So make sure that details of stock options, whether vested, not vested, exercised, not exercised, whatever it may be, all those details need to be declared in the annual IT return that is filed by that respective assessee.
Okay. There is another question from the participants. What would be the treatment of second house property currently occupied by brother for his office purpose? No rent is received. In case of salaried person, apart from one which is self-occupied. So he is having two houses, one is self-occupied and one is used by his brother for which he is not receiving salary. Can we take into account amendment as per Finance Act 2019 for two house properties? Yeah, CA Prajakta, would you like to answer this question?
No, I think Prunalini is going ahead with this.
I can answer it. No issues.
Thank you.
Yeah, the benefit is new benefit has been provided by the budget of 1920. Earlier, there was only one house property which was allowed, wherein we could take the benefit of self-occupied property. But through this 1920 budget, they have come up with now the assessee can take the benefit of claiming it as a two house property. So if he is owning third property, then only in that particular case, he has to take it as a deemed let out, and the deeming provisions would apply in that particular case. So yes, if the person is having two houses, now onwards, he can definitely claim the benefit of self-occupied property, and whatever the third property, if he is at all having, then in that case, that can be covered, and the deeming provisions would accordingly apply, like calculation of expected rent. You have to arrive at the annual value and claim the deduction at section 24 that you can go for. I hope I have answered it.
Yeah, you have answered it very well. So any other questions participant want to answer?
Pravina ji, I would like to add one point in HRA exemptions we were talking about. So let us take an example that an Indian resident has gone for a deputation to some other country. So basically he's working in India, gone for a few months in some other country, but his family is living in a rented house in India. So can he claim the HRA deduction from the salary? So as far as the analysis of the sections is concerned, the salary is paid by Indian employer within the India. HRA is separately paid. If it is separately paid during the deputation period also, and it is reported in Form 16, and if the other conditions of HRA exemption are satisfied, I think yes, in that case also the HRA deduction can be claimed. So that is one more point that I wanted to add.
Thank you very much. We have covered almost all the questions about the salary taxation. Thank you very much for such lively interaction and parties. We are almost almost 3 years we are discussing on the salary taxation, though it is covered in 3-4 sections. There are many queries and disturbance. There are many queries and problems for the taxpayers which get cleared from this session. And on behalf of Direct Tax Committee, I would like to thank our panelists, CA Monalini Damle, CA Maushmi Shah, CA Sachin Ji Minyar, CA Prajakta Ji Chincholkar, and CA Poonam Ji Pathak for giving time and for taking time and giving answers in detail for the questions of our participants. Direct Tax Committee will definitely come with the publications and give all these questions, take all these questions on the record and give answers so that it will be on record for the future reference also. So Direct Tax Committee will definitely come with the handbook covering all these questions, and if any other questions of the participants which are not covered in this session, they will also get answered, and they can plan their salary accordingly and get maximum benefit of tax planning and save their taxes. Thank you very much. I personally thank on behalf of myself to Direct Tax Committee and Chitrai sir for giving me opportunity to interact with this our expert panelist, and thank you very much. And sorry for the interruption from my side. Thank you.
Thank you, everyone.
Thank you, everyone.